Come next year, Ghana would end the IMF program. But as we get ready to end this program, possibly in August this year, how do we assess this program in terms of the corrections, the reforms? And are there any threats to this program, or even after the completion of the IMF program? Have we done the necessary reforms to ensure that we won't turn to the IMF again for an 18th program or 19th program? On PM Express Business Edition, we assess Ghana's fund program, or the extended credit facility with the IMF. Recently, the executive board passed Ghana on what can be called the fifth review, but also what really went into this assessment by the IMF. And going forward, are there still some concerns about the Ghanaian economy, or indeed we can all go to sleep? Or to do some assessment of the IMF program is no other person than the country representative for the International Monetary Fund here in Ghana, Dr. Adrian Alta, as the country rep. And I hope I got the pronunciation right. So, I mean, it's just, you started in September last year. One would ask that, how has it been for you first? This is your first African country, I stand to be corrected, that you are a resident rep, right? I'm right. Oh, just educate me.
Thank you, George. Thank you for the invitation. A pleasure to be here with you and your audience. Indeed, we moved this summer in August, and my job started in September, 2nd of September last year, and has been a good period for me and my family. We all accommodated to Ghana. People were very hospitable, and we visited part of the country which we enjoyed a lot. We enjoy the people, we enjoy the food here.
What's your favorite food so far? I mean, my early days here since August, do you like what's your favorite food? What has been your favorite local food?
I really like jollof. Rice. Ghana jollof rice.
Not Nigerian jollof.
Yes. I really like that with chicken. So that's one of the dishes that we typically have in our household on Fridays, sometimes with people around us.
You haven't tried the local fufu or all those ones? You haven't tried it yet?
We did. And
you didn't really enjoy it?
I like kelewele as well, so that's another
with the
one.
plantain, with the pepper and all those things.
Exactly.
I mean, this might be your first African country that you're a resident rep, but you've been to other African countries in terms of just the mission visit. I'm right on that one. How has it been for you so far? You've always been to other countries doing the mission assessment. Now you had the opportunity to be a resident in a country that is under a program called the Extended Credit Facility. How has been the experience like for you yourself? Because you worked in other countries, but this time you are in as a resident rep.
Overall, it's a different experience. Being in the country on the ground, it's different. You have different responsibilities. You have to manage the office. You are the primary interlocutor with the authorities, in this case, the Bank of Ghana, the Ministry of Finance. When you are based in Washington, D.C., as I've been for the past 12 years, you go to places, and I've been to Tunisia, Lesotho, Congo, Brazzaville, but you are there only for a few weeks. Being in the country, you face all the challenges and all the benefits from being on the ground. I have to say that the first 4 months have been quite interesting for me, a different career path, I would say. And the skill set that you need is quite different as well. So that has been very helpful for me to better understand the Ghanaian economy, the Ghanaian people.
Before you came in, you were on the mission visit, right, for Ghana. for, is it 2 months, or I stand to be corrected, right? You were on the mission visit.
Exactly. I came in September, October 2024 for the third review mission, which went to the board in end 2024. I was covering a few sectors, including the real sector, monetary policy, FX issues. So that also gave me a good opportunity to already understand some of the issues and some of the program objectives.
I see. I mean, we often tout our hospitality as our trump card in terms of Ghanaians. I mean, so far, how has that hospitality helped you in settling down to do this work as a country representative?
Well, first of all, I have a great team here in the ResRep office. Osa, Alice, Michael, all are great guys, and they've been very helpful to my job.
Let's come to the fifth review that recently the executive board passed Ghana, and that led to the release of some funds, meaning that we are just left with a final review before we end this program. What went into this review assessment that you passed that? Because, again, we'll be getting deeper into the staff report. If I go through the staff report, the fans still are raising some concerns about the outlook. So what went into the board saying that we've passed almost all the critical indicators? Was it a real assessment, or you wanted us to pass so we end the program?
Ghana's program remains solid and on track, with the fifth review being completed and the disbursement being done in December, at the end of December. And now the total disbursement under the ECF program that you have rightly mentioned reached about $2.8 billion. Now, the IMF board has met and approved the program on December 17 and categorized the performance, the overall performance, of generally satisfactory. All indicative and performance criteria targets have been met, and most of the reform agenda has been concluded and implemented. The authorities implemented strong corrective actions in the aftermath of the 2024 fiscal slippages, and the 2025 macroeconomic outcomes have been better than expected. Inflation came down faster than expected, growth exceeded expectations, reserves have improved, the currency appreciated and stabilized. There are many macroeconomic indicators that performed very well. At the same time, the debt restructuring progress has been advanced. Now, the IMF board has commended Ghana for renewed reform momentum and strong program ownership, and that is key to the progress that we made so far.
You have been on other programs. Were you surprised at the progress of this current program? Because if I go through your staff report and the previous staff report as well, and even commentaries during your visit, at a point in time you were surprised at the progress of some of the critical indicators. But if you were actually looking at this program, if you were part of this program, for you, what surprised you about the authorities, both the Bank of Ghana and the Ministry of Finance, when it comes to some of these critical indicators and the pace of reforms and movement? Because you set some targets, they overshot those targets, and if you engage some of your guys personally, they've been surprised at how the program has performed. For you, what do you make of this program in terms of the implementation of those critical targets?
So the IMF typically is conservative in their assessment and projections. we typically want to be surprised to the upside when it comes to growth. But overall, I would say 2025 has been a very good year. The fiscal discipline helped to put the public finances in order. The tight monetary policy and the accumulation of reserves by the Bank of Ghana helped with the steady credibility as well. And then in terms of reforms, I would say a key structural reform implemented in 2025. There were many, but one key reform is the improvement to the fiscal responsibility framework, the Fiscal Responsibility Act, that basically adds two fiscal rules and the plan to implement an independent fiscal council. And these are likely to help in the long term with fiscal sustainability.
You use words and even the staff report like generally satisfactory. It appears that there are still some concerns.
Yes, basically we need to continue this reform momentum in 2026 such that the gains and the hard work that has been achieved so far is not easily dissipated, you know. So I would say we need to continue with the public financial management and procurement controls. We need to continue the work on the domestic revenue mobilization by improving tax collection, tax administration in particular. And then we also have the financial sector, which went through the domestic exchange program, the DDEP, the debt exchange program, and there is still some need for recapitalizing the banks, putting stronger supervisory powers in place, and ultimately the governance, especially in the SOE sector, governance and anti-corruption work has to continue, particularly when it comes to high-level officials, the asset declarations of high-level officials, and other issues that were highlighted in the governance diagnostic assessment.
One would ask that, what is next for this program? I mean, I know we are done with the fifth review. I know that we then moving into the sixth review. What is next when we have the next country visit, when we do the staff assessment? When do we go to the board? And when does this extended credit facility come to an end? So maybe one by one. Sorry, I'm just jumping everything together.
Okay, so the program will follow a clear timetable in 2026. We expect a staff visit in February, followed by the final review, which will be combined with the Article 4. And finally, the last board meeting is expected in mid-July to mid-August. The Article 4, which we penciled in at the end of April, beginning of May, with the last review, is also a good opportunity for the team, for the IMF team, to deep dive into several more technical issues, such as assessing the fiscal space, debt and external sustainability assessment, and other topical, interesting issues, such as the energy sector assessment. So in a nutshell, I would say there are two missions in the first half of the year that we expect. A staff
that
visit.
Is in February, and then
the last review at the end of April, beginning of May, followed by the board meeting, which typically takes a couple of months after the visit to be assessed.
I mean, you worked on other countries as well. Has there ever, and let me play the devil's advocate here, where a country is in a program, the last leg of the review, there are concerns, and therefore, again, they couldn't pass that last leg of review before?
I don't recall any of these instances, but let me say that Ghana is on the right track.
They've come very far that
very
you don't
far.
see...
There are a few loose ends, like on the governance side, anti-corruption side, that we need to make more progress, and we have the asset declaration, the publication and stronger verification of asset declaration that we need to make progress. But otherwise, the program implementation has been very strong, and program ownership by the authorities has been very strong.
When I went through your initial extended credit facility, this program should have ended in May 2026, and I stand to be educated. In the staff report, there was talk about an extension. Who requested for that extension?
So let me clarify this point. The 3-month extension is purely technical in nature. It basically allows the IMF team to fully assess the data at the end December and end March. And that data will only be available in April. So we are going to have the mission at the end of April. Basically, from that point to the board meeting typically is about 2 months and a bit. That's the fastest that the board can meet. So this 3 months extension is not, it will not change any of the program objectives, the duration, or the financial envelope in any substantive way. So it just ensures that the last review is done in an orderly manner.
The docket, someone would say that when this program was being put through, the fund, having worked on several programs, and Ghana has been to this fund for program about more than 15 times or 16 times, we knew about this thing. So what do you tell those who are still asking the question, that has it been that we got off track during the program and there are still some inherent challenges, and that is why an extra 3 months is needed to finally close the chapter on Ghana's extended credit facility?
So let me be clear. These extensions are typical for IMF programs. In fact, the 3-month extension is very short extension. And it's just to make sure that all the structural reforms are implemented, all the data is available, and we can do a good assessment during the review mission, and we can do our work properly.
I still wanted to establish something. So did it come from the fund or it came from government?
So basically, this was discussed with the government at the 5th review mission, and it was approved by the board in
so
December.
Government has agreed to this extension, and it's from the two parties saying that based on these concerns, the program will now end in August 2026. I'm starting to be corrected. That's the timelines. And for you, do you think that it will be enough time to do all these things that you have to do?
As I said, it's mostly about the data availability. End December and then March. It would be impossible to have data at end December that is final and acceptable, audited, and so on, before we come at the end of April.
So basically, if I get it right, you needed more time to get all the critical data needed to do that assessment. That is why, together with the country, it was agreed that let's have this extra 3 months to complete the program. And that was the
Exactly.
reason why. So it hasn't got to do
Exactly.
with government getting off track or the fund thinking
Has
that
nothing
there
to
are
do with
problems
that.
with the program.
Has nothing to do with that.
And that is
No.
why we have to extend this program.
No, has nothing to do with that.
This is PM Express Business Edition, engaging the country representative for the IMF Ghana. As you assess Ghana's program with the International Monetary Fund, outlook, threats, status of this program, and indeed, when we end this program, could it be one of our final programs in recent times? But some are saying that as long as you're a member of the International Monetary Fund, there will still be some sort of program. This is PM Express Business Edition. We'll take a short break, and we will be right back. Welcome back to PM Express Business Edition as we look at Ghana's program with the International Monetary Fund. How is this program doing? What are the threats to this program? And after August 2026, can this economy stand strong on its foot without this fund assistance in terms of those technical support? Or there are still some threats to this economy? And when the fund leaves, it will really expose us. I'm taking to Dr. Adrian Alter. He's the country representative for Ghana. And thank you so much, Doc. Again, I'll bring back the staff report because I go through the staff report and I struggle to comprehend with the assessment of the board and the staff when they say that the program is generally satisfactory, because in your staff report, you mentioned about the risk to the economy and how this risk could expose the economy and even the program itself. What would you tell those who say that that is quite interesting in terms of that assessment in the staff report?
So identifying risks is normal and essential for our credible surveillance. This is typically done in all staff reports. However, the IMF staff report for the fifth review has rightly acknowledged that the program has delivered clear benefits: lower inflation, renewed confidence, improved reserves and buffers, and fiscal stabilization. So, highlighting the risks helps maintain vigilance and at the same time reform momentum and credibility.
Because again, I looked at the report and you mentioned about how the commodity spike or boom has played a critical role. And if there's any reversal to these prices, that could pose a big challenge to the economy. If this program is generally satisfactory, if this economy is doing that well, then we should have been able to build those buffers to withstand these shocks. If you say these things in your staff report, the skeptics will say that maybe we are not out of the woods yet.
Okay, so Ghana remains vulnerable to commodity price shocks. We talk here about gold, cocoa, oil prices. The IMF report has an analysis, if you look at Annex 2, that shows how these shocks could propagate in this macro financial setting, and rightly identifies that commodity price shocks, so lower prices for cocoa, gold, and oil, can lead to lower export proceeds, lower fiscal revenues. It can put pressure on the reserves and on the exchange rate. So these are important risks. At the same time, you, on the policy side, you want to strengthen the buffers. That is what Ghana has done in 2025 and continues to do in 2026. Diversify exports. That is important to move from raw materials to other more complex exports. And these are critical steps to basically protect against these external shocks.
But Doc, I mean, I for that person on the street, again, I get you that these things are normal. But again, if this economy has been able to build those shocks and the reforms, any spike in or drop in gold or spike in crude oil prices, the economy should be able to withstand that shocks. I stand to be educated. Doesn't it raise concerns about what this program has been able to do for the economy?
Right. So there are a few structural reforms that the program has been anchored on, including on public financial management, revenue mobilization, commitment controls that basically lead to fiscal discipline. Also on the restoring the financial sector in the aftermath of the DDEP, the domestic debt exchange program. And finally, you want to have all the other checks and balances in place, such that the buffers that you have built on the FX side, on the fiscal side, the fiscal space, allow you to go through some of these shocks. So basically, we want to continue to build resilience in the economy. And that is possible through higher external buffers, fiscal discipline, and debt sustainability, and eventually through private sector-led growth and more jobs in the economy.
So these things are being done, and therefore you see these things as possible threats, or these are just scenarios that you were capturing in the report, or it's a reality that if there's a shake-up in commodity prices, you should be prepared for the worst?
I mean, commodity prices typically go through a boom-bust cycle. You know, Ghana has been through some of these cycles with oil in 2015, 2016. Basically, what it meant for the economy was that not so much investment has arrived to this sector. I would say these boom-bust cycles are typical for commodity prices. That's why diversifying the export base is crucial for the Ghanaian economy.
Let's come to the debt issues, because again, we've done a debt restructuring program and we've made some critical progress in that area. So it was the expectation that in that staff report as well, or in that report that you submitted to the board, you would recognize these reforms that has been done. But the IMF is still classifying Ghana as a high risk of debt distress. Are you just not being fair to Ghana?
Okay, so I would suggest for you to read the staff report and turn to the debt sustainability analysis and perhaps show to the audience some of the charts in that analysis. All debt indicators have improved significantly, and the report fully acknowledges that. But given that these gains are primarily driven by the cedi appreciation, which eventually was driven by exceptionally unprecedentedly high gold prices, hence it remains vulnerable to reversal. So all these gains could be reversed. What the report says as well is that these gains and the debt sustainability will still be assessed again at the last review, and there are good prospects that an upgrade could come at the last review if the current trends will continue. What basically means is that the team wanted to have more time to show clearly that the data and the assessment, the objective assessment, and the gains that ultimately were acknowledged in 2025 are persistent and entrenched. And that's why they mention that the assessment remains data driven, and the prospects for an upgrade are positive.
And so if we meet in April, or we do the country assessment in April, and the indicators are still looking good, there's a likelihood that the staff would review this assessment when it comes to Ghana still being classified as high risk of debt distress. That is the situation.
The situation is that we hope that the current trends will continue. We want that the government and the authorities continue to build resilience, build buffers, continue with the fiscal discipline, and together with the debt restructuring progress. So if that is also finalized before the last review or the last board, that will allow us to upgrade Ghana's rating to moderate.
Dr. Alda, I mean, we are in this program together. This is not a program that is being implemented by another country. The fund is working with Ghana on this program. Sometimes I go through your report and I get when I see some level of caution, some level of skepticism. Some are saying that, does it again let people who are outside raise concerns about this program? Because some are saying that you are part of this program. If indeed they are threats, if indeed the data is sustainable, if this data is accurate and can withstand shocks, that commitment, that optimism should be coming from the IMF. And so if the IMF says that they still want to observe and see, aren't you worried about anybody who raises the concerns that does the fund itself believe in this program?
We do believe strongly in this program, and the achievements so far, the macroeconomic stabilization has been acknowledged, and you can read in the staff report that we are very happy with the macroeconomic indicators, including on the debt side and external indicators. However, some of these gains were also because of the positive external environment. And if you look at the commodity prices, particularly gold, almost doubled in 2025. That basically fed into higher FX flows for the country, and eventually led to the appreciation of the cedi. And part of this appreciation, basically the valuation effect coming from the exchange rate, is reflected in some of these debt and external indicators. What we are saying and what the team is saying in the report is basically that we need a bit more time to show that this is a persistent effect and is not reversed immediately.
Let's come to, you've talked about commodities, the Bank of Ghana and its exposure to several sectors of the economy. In your report, you spoke about the gold board and the exposure and the expected losses. What was the basis of that assessment by the staff that they were in town to make that assessment? Because the bank or several actors, or even the Bank of Ghana, is describing it as speculative because they have not put together, they are not reported. What was the basis of that assessment that you felt that BOG has made X loss because of their exposure to gold board?
Okay, let me clarify a few things. First of all, if you read the staff report, paragraphs 32 to 36, you will see that the IMF has not classified or characterized the domestic gold purchase program as a purely loss-making operation, okay? Instead, it emphasizes both the benefits and the costs associated with the program. On the benefits side, the DGPP, the Domestic Gold Purchase Program, has helped to accumulate reserves, has also alleviated some of the pressure on the FX market in difficult times, and it helped the BOG diversify the reserve accumulation and the export. Okay, so these are clear points, well acknowledged in the report. At the same time, the report makes the case that there are operational and financial risks associated with the program, particularly when it comes to the gold bond related flows. Okay, and those operational and financial risks come from trading activities, from exchange rate risks, and financing risks, because the gold is also volatile, so there is market risk involved, and also how gold is financed and monetized also matters. Okay, so the assessment done on the exposure in the report basically just tries to bring more transparency to the program and at the same time help improve risk management surrounding the program. Now, I would say a key clarification for what has been mentioned in the report is that gold bond related activities are quasi-fiscal in nature. Therefore, any loss associated with these activities should not be on the BOG balance sheet, but rather should be brought on balance, on the budget, on the fiscal side. And let me explain why. Because any losses or any issues related to the program will eventually lead to a weaker BOG balance sheet that could risk the implementation of their core mandate, which is price stability. So it can impair their ability and credibility, and eventually can fade central bank independence. So this was one point that I wanted to make and basically give you a balanced view of what has been said in the report. So in a nutshell, the DGPP program has brought lots of benefits, and those are acknowledged. And at the same time, there are risks associated, and with better management, better governance, and sustainability, the program can bring even more benefits. So going forward, I think the public debate and the discourse has brought all these things to the surface, and I would say brought more transparency, and eventually it will lead to a system to a program where you maximize the benefits and at the same time minimize the costs associated with the program.
So this, and sorry if I just trying to get some education here. So this expected loss or whatever, was it more of a projection rather than your analysis on the exposure to say that BOG would end the year with this X loss because of the trading and all those things? What was the basis of the staff in their assessment to say that this is going to be the expected loss?
Okay, so let me clarify that point. At least what I understood from the speculative term used by the BOG. By now, this might have changed in the meantime, but basically what they probably meant was that the data that the team has reviewed and analyzed was not final, because the 2025 accounts are not yet audited. So the expected losses or the realized losses in the end might change up and down once the audit is completed.
Yeah, but I know that, yes, in auditing, I mean, by now anybody who's working on this area knows the expected loss. And sometimes maybe, if I want to use the expression of +1 or -1, it won't be out when you try to do your extrapolations and projections. But again, to help my viewers appreciate this, because I know what the fund goes through in putting together their staff report. This is not like a media person saying hearsay. There's a team on the ground, there's a technical assessment. Even before a staff report comes out, it goes through several departments at the IMF. So when a fund says something in their staff report, this is not based on hearsay. And that's why I'm just trying to establish that. So what was the basis of that projection, that you saw the numbers, you did your own review based on your engagement, and the fund or the staff stand by the assessment that based on the current arrangement, BOG would end the year making this X loss because of their exposure to gold board.
Indeed, the fund will stand by their assessment, and that you are correct. It went through a thorough review process. Ultimately, as I mentioned, what is important here to realize is that we didn't want to assign any blame on BOG, Gold Board, or the Ministry of Finance. What we wanted to achieve with this disclosure is more transparency, and that we ultimately put in place the risk management and the right checks and balances such that we minimize the costs associated with the program. The benefits of the program are very clear and well emphasized in the report.
Are you worried sometimes? And I know you've done these things over the years. I mean, this is a staff report. This is not one person's assessment about the commentary post the release of the staff report and all that has been said. And there are some who even say that this is the reason why we don't need an IMF program. This is why we have to end the program so we can. The fund is not interested in. They've not been interested in a gold-backed program and all the rest. They don't want us to be independent. You've heard all the post commentary after the staff report. Does it worry you about some of the commentary, sometimes from certain very knowledgeable people, about this your assessment?
No, the debate after the staff report was released, it's very healthy. It brings about the discussion about the benefits, the costs, how to improve the current system. I think that is key to the debate. As I said, we don't see the domestic gold purchase program as something bad that should be stopped. It's a good program. It should continue. At the same time, we want the costs associated to be showed in a transparent manner. If they are fiscal in nature, they should be brought on budget. And ultimately, we need to minimize those costs to the extent possible.
Do you think that we are making progress in terms of reducing the exposure of, I know the fund's position on a central bank and how you want to ring-fence it, be independent and limit all these exposures. First was the gold for oil program, and there were some concerns with that. Now it's this gold purchase program and this linkage between the Bank of Ghana and the gold board. Are we learning our lesson in terms of how we can move some of these things from the monetary exposure to more fiscal and ring-fence Bank of Ghana's independence, because it has always been the last resort, and anything that the fund wants to do is to protect the central bank in that country?
I would say that the reforms surrounding the Bank of Ghana, for instance, the Bank of Ghana Act, have moved into the right direction towards more central bank independence, which is key, eliminating to the extent possible monetary financing. All those issues ultimately interfere with the primary mandate of the BOG, which is price stability. So I think the ultimately, as we said, if we manage to bring those quasi-fiscal activities on budget, if we manage to ring fence and put safeguards in place, make sure that the BOG is not making the losses, ultimately this program, the domestic gold purchase program, will lead to much higher returns and benefits for the Ghanaian people.
What do you make of the operations of the new gold board? Because there was a precious minerals marketing company that was doing a similar arrangement, but there's been a whole restructuring and the new role of gold board as the fund. Are you excited by it? Is the fund happy by it, or the fund is not happy about the whole gold operations of gold board? And some are saying that. That's why I come back to the question about what does the fund make of the operations of the new gold board?
So you are right about the new institution that basically PMMC before was migrating. Exactly. So the small scale mining, the licensing and regulation has been a long-standing issue. Actually, we looked at a research paper that shows that this has been long-standing issue for more than 4 decades in Ghana, and it has basically, there was some technical assistance from the GTZ, the German, basically the external arm of Germany, and all those basically try to improve the governance and how the licensing is done, how the regulation is done. Obviously, over time, issues have deteriorated. Galamsey, all those have exploded, if you want, because the prices started to climb. Okay, so this became even more difficult to control. I think moving into this direction with gold board is a good way to ring fence an institution and have all the checks and balances there. What we argue about is about the governance and the risk management that needs to be properly set up with this new institution. So eventually, in a nutshell, as we work on with the government to improve the current system, it will lead to better institutions, better state-owned SOEs, and will minimize the fiscal risks for the government in the future.
Dr. Alta, when we come back, I still want us to talk about the Bank of Ghana. You mentioned the new Bank of Ghana Act, but again, how do we strengthen the Bank of Ghana's independence, and also the FX operations framework as well? What do you make about the intervention? I went through your data, and from the fund, it appears that last year the cedi was among, or if not the best performing currency based on the assessment of African currencies. So I'll be getting more details on that. This is PM Expert Business Edition. As I engage the country representative of the IMF, Dr. Adrian Alta, to look at Ghana's program with the IMF. We'll be right back after this break. Welcome back to PM Express Business Edition as we look at Ghana's program with the fund and what are the threats to this program, and indeed whether come or after August 2026 we can indeed stand on our feet and ensure that we can manage this economy without a fund program. Dr. Alta, I'm still struck with your name, just forgive me. I mean, I was just trying to get your quick thoughts on the Bank of Ghana's what do you call it? The new Bank of Ghana Act. And for you as a fund, are you excited a bit about the independence of the bank? the recapitalization of the bank and protecting the central bank?
I think that is going in the right direction, and we appreciate the progress made on the Bank of Ghana Act. What I think is also important is the new FX operations framework and other issues.
You play a very critical role. But even before we look at the FX operations framework, I mean, what do you make of the performance of the Ghana cedi? Because when I go through one of your data, the fund has, in terms of the African currencies, it ended last year as Ghana's currency being the top African currency for 2025. What do you make of the rallying of the currency? And there are some who asked questions about whether it is sustainable or how we are going about it.
Indeed, like other African countries, Ghana has experienced a positive terms of trade shock. Basically, higher gold prices or higher copper prices improves the terms of trade of that country, and that basically results into improved current account balance and higher FX inflows, eventually leading to FX, the local currency appreciation. So it's a very clear mechanism from the terms of trade shock or higher gold prices, if you want, in the case of Ghana, to the currency appreciation. If you look at how the dollar has performed in general throughout the globe, you can see that it has a negative of about 10% return against all other currencies in a trade-weighted average. So the fact that Ghana performed very well is not a surprise necessarily, because of the high gold prices that basically led, and the production on the gold side that eventually led to the currency appreciation. And that was also a reflection of other policies, you know. So monetary policy has been tight throughout 2025. Better liquidity management, sterilizing the excess liquidity on the cedi side. Also the fiscal discipline and other debt-related issues that restructuring progress all collectively allowed the cedi to appreciate and then stabilize. I want to bring also this structural reform on the FX operations side, because that also boosted the transparency and the price discovery, and at the same time reduced market distortion. So unifying the FX auction framework, and then eventually bringing more transparency, pre-announcing the amounts that will be sold each month, that improved substantially the functioning of the FX market.
Do you see this framework or the reforms that has taken place so far, that era where we saw huge depreciation, that era when we saw BOG have to be on the market always, and now we understand that there's a difference between intermediation and intervention. Do you think that it is now a thing of the past based on these reforms? And if Bank of Ghana should be working with this framework as its Bible, at least holding all these variable constants, we wouldn't be witnessing those sharp depreciations and sharp, squeeze or our reserves going down. Do you think that those challenges in the past will be a thing of the past based on these reforms in the framework?
So the new FX operations framework has sets three objectives for the BOG. Basically, first, to continue to accumulate the reserves. Second, to intermediate the FX flows, those related to cocoa and gold proceeds that come to the BOG. And finally, to smoothen the FX volatility. So all three objectives are very important. On the reserve accumulation, there were certain targets under the IMF program. And the good performance in 2025 basically allowed them to reach the objectives way ahead of the end of the program. Okay, so the lower benchmark there was 3 months of imports coverage.
6 months now.
Three months exactly. So that was already achieved. That basically allows the BOG to accumulate reserves, to continue to accumulate reserves, but at a different pace. The FX intermediation, I think that is a key area. So basically now the BOG gets more flows through the DGPP program, including the gold bond flows, okay? And then it intermediates them in the FX market for the commercial banks in a transparent and regular way with auctions, regular auctions organized every week. And then the amounts are pre-announced. So that is a huge, I would say, an important development, an important framework that helps the market be more transparent, allow for price discovery, and eliminate to the extent possible market distortions and unfair competition.
There are a lot of actors who are for market forces determining the rates. If you follow the commentary, there are some who still think that we've not gotten to that bit yet in terms of the determination of the rate, and there's somehow intermediation playing a role to manage the current rating. What is the fund's verdict in terms of going forward? Should it be a strict market determined rates, or a little bit of intermediation is needed to do the corrections?
Well, let's make a clear distinction here. The intermediation is necessary for the BOG because it receives all these flows from gold proceeds, from cocoa exports, and everything that is related to repatriation restrictions. Okay, so that flow ultimately needs to be intermediated by the BOG unless it starts eliminating some of these restrictions. And it has already done some of that progress with the mining export flows in 2025. So there is this kind of transition period where the flows will start gradually going more to the market. Now, when it comes to the other objectives, the third objective, as I mentioned, is the exchange rate volatility. So the bank will determine how volatile the exchange rate is, and whenever it's not in line with the fundamentals, it can decide to intervene. This on top of the intermediation flow. So it can top up the auction with more FX if, for instance, the fundamental drivers are not in place, and they are not the drivers of the steady exchange rate.
And I get from you, so there isn't anything like a strict market determined rates or market force determined varies. There will always be some level of corrections together with the market forces determining the rates. And are you satisfied with the current rates on the market?
We don't typically comment on exchange rates. Yeah. The exchange rates are typically driven by multiple factors, external factors. As I mentioned, the prices of commodities is one of the main drivers, the terms of trade, and so on. The analysis in the report you can see from the real perspective, so the real effective exchange rate. The report assesses how the SEDI was at the end of 2024, and you can read that in the report. Basically, it was undervalued by some measures by about 15%. That has corrected in 2025. So you can read the assessment, external sustainability assessment, and then you will get some view from the IMF.
But I think that the Bank of Ghana sticks to this framework thing. We may not be seeing those huge shocks that we saw in the past, and that's what I was just trying to get an understanding from you. They work with this framework.
The framework basically allows the Bank of Ghana to build resilience. And these FX buffers, the more the merrier. Basically, the more buffers the Bank of Ghana accumulates, the more ammunition will have to deploy in case market conditions become disorderly. So that is a good development. And the second development is the framework that basically allows in a transparent and orderly manner to assess the priorities, accumulation of reserves, intermediation, and smoothening the volatility. And ultimately affects the volatility or the exchange rate float allows you, so flexibility allows you to protect against extreme shocks. So you don't want to lean against the wind when huge shocks happen globally. If all currencies depreciate against the dollar, why would you lean against that wind? So you want to keep your ammunition from when your currency depreciates and is not in line with the fundamentals. That's kind of the point.
Let's look at inflation, and again, surprised at the rate of movement and what the Bank of Ghana has done. And do you think that we will still be in the single-digit band? Because I read through your staff report, and you were looking at still ending the year at around 8% and then 7.5%. It appears that the fund is quite optimistic that we will be within the single band for the rest of the year.
Okay, so first, achieving the single-digit inflation is a major milestone. I think it's for the first time over the past 5 years that we are within the BUG band, and the last number, 5 and a bit percent annual inflation at the end of December. It's a huge way down from 24% at the beginning of 2025. And this has been helped by tight monetary policy, supported by fiscal discipline, and also by the SEDI appreciation. Now, sustaining this into 2026 depends on credible monetary policy stance and the prudent fiscal policy, as well as the favorable external conditions. And here you have the gold price volatility, so commodity prices, including also oil and cocoa, which are important commodities for Ghana, but also food prices. So if you look at food prices, they came down in 2025, at the end of 2025, quite substantially, and that has been helped by better weather, better production, better crop, better yields. Is not very clear whether that will continue in 2026, and whether and commodity shocks basically remain the key risks to inflation outlook.
And so, but in your report, you projected that we would end the year still with a single digit, and so you're quite optimistic. But what are the threats that you see here to these targets that you put out in terms of the inflation thing? That the commodities are one?
The commodities, and then the weather-related issues. So if you have I don't know, drought or floods that could affect your food prices. And eventually, I think the monetary policy needs to be credible and tight enough to allow the inflation to be kept in check. So basically, you don't want to ease too fast. You want to ease gradually.
Slow the policy rate adjustment that they will be doing.
Exactly.
But someone saying that this liquidity squeeze is coming, or they will come at a cost to Bank of Ghana in terms of whatever monetary tools that they put, or open market operations, or the bills that they are using to mob. It is going to come at a cost. That is the cost of price stability to the economy.
I am not sure what.
I'm just saying that if they are in their quest to try and mop up liquidity on the market, these are bills that BOG has to pay money on. And the impression that, yes, they're doing well with inflation is coming down. But the reverse is that BOG has to pay interest to these banks and investors that they are trying to mop up. And therefore, how do you weigh in trying to correct one thing? There's also another cost to the Bank of Ghana.
So the cost came down quite significantly. You know, the reference rate was 28%, now it's 18%. So the costs have come down 10 percentage points over the past year. And at the same time, the Bank of Ghana can organize the options in different ways. I don't want to go into technical details, but it can absorb unlimited amounts at competitive pricing. It can change the way the auctions are done. So it can minimize somehow the costs associated with the open market operations.
Someone say this is quite interesting to have single-digit rollout for almost a year. That is interesting, some would say, in terms of for the projections for 2026. Don't you see that's interesting?
Well, basically, the objective, if you want, the target is 8 plus minus 2%, right? That's where the BOG would like to keep, and that's how we base our projections as well. We base based on this target. We basically believe that the BOG will do whatever it takes to keep inflation within this band.
Let's come to the taxes issues and revenue. And for you, are you satisfied with the progress that we are making? Some have said that it's still a huge concern when it comes to revenue mobilization, these VAT reforms and all the rest. And I'll dovetail even into the budget as well. At the fund, are you satisfied? I know that your ITAS, the institution, has been helping Ghana over the years in trying to reforms. Are you excited about these new reforms and the impact on revenue mobilization? Because when I read through the staff report again, the fund was a little bit worried about the immediate shocks of these reforms on the revenue envelope. But do you think that going forward, we can address that problem of that tax GDP ratio and mobilizing the right revenue to finance the expenditure for this year?
Yeah, so basically, if you look at the 2026 budget, the main measures introduced are related to the VAT reform. And there is one assessment here in the report, the text table 2. Perhaps you can show it to the audience.
I'll do that.
Basically, the main item is on the removal of the COVID levy. That is quite a substantial relief, if you want, to households and businesses. And at the same time, you have the measure of the threshold that has been elevated from 250,000 say to 750,000, and that also basically allows that smaller businesses will not have to comply with the VAT, but rather pay the modified taxation. And basically, this we think the impact on the the revenue itself will be compensated by a few items, such as the removal of the exemptions on more than 300 products. And basically that levels the playing field and broadens the tax base. And at the same time, you have all the reforms that you have mentioned on the tax administration side, digitalization, custom automation, and those will eventually strengthen compliance in a sustainable manner. So in a nutshell, for instance, the impact on the revenues from the VAT reform, if you put in place everything, both on the removal and the reduction of the effective VAT rate from 21.9 to 20%, plus the other measures that compensate, are eventually going to lead to an increase in a minimal increase in revenues. However, the tax administration reforms, ITAS and the digital systems, those are going to lead to more revenue. At least this is the forecast over the medium term.
So immediately, we shouldn't expect an immediate impact on the revenue envelope in terms of government meeting its target. Because that's the concern by some of the experts who think that these reforms are good, but it's more of a medium-term impact than an immediate impact on the economy by the end of this year.
Only time will tell, you know. Hopefully, some of the benefits of all these reforms will be already seen in 2026. Hopefully. in terms of tax collection.
The budget. Let's look at the budget as well, and let's look at the fiscal side as well. Are you excited with the programs that are being put in place, you know, to deal with the fiscal issues and the stability of the economy as well?
Okay, so the 2026 budget supports both fiscal consolidation and at the same time promotes growth and job creation. So I think that is the overarching theme of the 2026 budget. Now, this is broadly aligned with the IMF commitments on revenue, spending discipline, and social protection. What is important about the 2026 budget is that it targets a primary surplus of 1.5% of GDP on the commitment basis. And this is in line with the Fiscal Responsibility Act. And at the same time, the overall fiscal deficit is projected at 2.2% of GDP. So in a nutshell, the 2026 budget is well aligned with the objectives of the IMF program, and the structural reforms that are put in place will eventually lead for these targets to be met.
On the fiscal side, is the fund worried about any threats or any concerns there in terms of going forward?
So on the fiscal side, there are a few risks. Revenue underperformance is one of them. Basically, revenue underperformance can happen because the GDP, the gross domestic product, increases at a higher pace than taxes. The second threat is on the structural reforms and this commitment, authorization, procurement controls, and PFM issues, public financial management issues. All these reforms need to continue in 2026 because they will ultimately lead to fiscal discipline over the medium term. The third, I would say the third threat to the fiscal side is related to commodity prices because lower gold and oil prices will eventually lead to lower royalties for the government. So those are, I would say, the three top risks to the budget. And obviously, outside these three risks, you also have the SOEs in the energy sector So making sure that the state-owned enterprises, the fiscal risks coming from them are well contained, and you have in place the good governance and risk management related to state-owned enterprises.
We're ending this program in August 2026. Do you think that this program has really helped this economy in terms of those structural reforms? Because there are some who are worried that similar concerns or similar optimism, excitement was had when we completed our 16th program with the IMF, but we ended up in a 17th program. Let's look at first on the reforms, and for you, well, let's look at what has this program been able to do for the Ghanaian economy that someone out there should be excited that it was indeed a good decision for Ghana to come to the fund, to have a homegrown program and an extended credit facility program.
Okay, so the program has achieved significant milestones, particularly on the macroeconomic stabilization. Inflation came down quite significantly. The fiscal position has improved. Domestic debt restructuring is also a key element here, the public debt. And then the external buffers have increased substantially. If you remember, at the start of the program, there was less than a month of import coverage. Now we have more than three and a half import coverage based on some of the metrics. Now, what is important is that this reform momentum continues in 2026. We need to continue on the domestic revenue mobilization. The PFM and the commitment controls, the procurement reforms. And then we also have the reforms related to the energy sector, which we have done a lot of progress in these past 2.5 years, and we hope to continue this progress in 2026 to make the sector more efficient and reflective of the costs. And then we have the financial sector, which basically recovered from the DDEP, the domestic debt exchange program, and has been recapitalized. There were other measures put in place to improve regulation and to deal with the high level of NPLs. And then eventually you want to come to the governance and anti-corruption measures. And as I mentioned, strengthening the verification of and the publication of asset declaration of high-level officials is one of the key.
That's the major concern
reforms.
for the fund in terms of the reforms, right? But they have still not been implemented in terms of the publication of the asset declaration and not it being kept somewhere. Are we going to make any progress on this before the program ends?
This is what exactly the staff report of the fifth review mentions, and this is where we hope the discussion will be focused for the next few months. And
you hope the fund is hopeful that some progress will be made on that one?
Yes, we will. We hope to find a mutually acceptable solution to this to the asset declaration.
What is it about? You mentioned the asset declaration and then governance and corruption. What are the concerns that the fund has also raised when it comes to the governance and the corruption issue as well?
Well, very good. So the fund published the governance diagnostic assessment in November, and the authorities have also the MOF, the Ministry of Finance, has also published it. So that report discusses all the issues, if you want, with governance, state-owned enterprises, procurement systems, also anti-corruption, money laundering issues. So all those pillars are nicely outlined in this report assessment. And we hope to make more progress. We have already made progress on the implementation of some of those issues, and we hope to continue to make progress.
You mentioned the ejector, but as we try and wrap up on this discussion as well, the government announced that for last year they made some payments in terms of the energy sector debts and all the rest. In terms of the reforms and the payment of these debts, what is the fund's position on the energy sector? That have we made that critical progress in terms of making it stabilizing the sector and all the problems that it had over the years? So there are still some things to be done.
So the energy sector poses fiscal and financial risks to the government, but there has been a lot of progress done over the past 12, 18 months. For instance, the renegotiated arrears with the IPPs, the new plan. Exactly. So that is a first step forward, and we hope that the plan will be implemented going forward. Secondly, the implementation of the cash waterfall mechanism, that is also an important aspect, and then the adjustment of tariffs to reflect properly the costs. One key issue related to that, to the ECG revenues, is the transaction advisor for the private sector participation, particularly in this area of revenue collection, which needs to continue to be improved.
The fund is for it, as for that private sector participation. The fund is based on what you have in your report.
That is more of a that issue is more on the World Bank side, and we think is the right direction for the sector to become self-sustainable.
Just a little bit of education here, Doug. I know this whole program is not just about the IMF, but the World Bank as well. But not to speak for the bank, are we going to see other donor partners also come on board in terms of the financial support now that after the Fed review, some money was released? Not specifics, but putting all these donors into one box. Are they also going to come on board to support the program in terms of financial assistance?
We do have a very good collaboration with the World Bank, the IFC, the development partners here in Ghana, and we continue to work closely together. There are lots of synergies with the World Bank in key sectors such as the energy, cocoa, and so on. And we hope the progress that we have made so far will have a catalytic role for Ghana to attract more of the donor support, but also private investment, FDI, and others that will be essential for lifting growth and living standards for the Ghanaians.
So as we try and wrap up this discussion, and I asked this question earlier on that when we were ending the 16th program with the IMF, everybody was excited about the reforms, the structures in place. And for many people, being a member of the International Monetary Fund, you cannot close the door to the fund. There are other several advanced economies, if I could say, that still have some technical support and assistance intervention from the IMF. But maybe the concern is the recent frequency to the fund for an extended credit facility program. We are ending this program in August. The economists will say, all other things being equal, do you think that the necessary reforms are well grounded? The technical reforms are well grounded, that we will not immediately, a few months down the line or years down the line, come to the fund again, not for technical assistance, but another extended credit facility program? Or the economists who say, well, we don't say never, because Ghana is a member of the fund, and at any time they can call on us.
Well, as I mentioned, the the Ghanaian government has achieved significant milestones, including on the macroeconomic stabilization, on the reform side, structural reform side. What we hope is that these reforms will continue, building resilience will continue, and the IMF stands ready to partner with Ghana going forward. If this engagement will be through technical assistance or through a non-disbursing program or some sort of engagement, we stand ready to help Ghana and the Ghanaian people.
I know the fund's readiness to help Ghana and any other member of the International Monetary Fund, but some people look at the frequency of program with the International Monetary Fund as serious questions with the immediate program, because if these programs achieved all the reforms, we shouldn't have a situation where there are policy credibility issues 2 years down the line. If these reforms are well grounded, 3 years down the line, people should not be raising concerns about policy or raising issues about policy credibility. And that is where the concerns are.
I agree. And the measures that were put in place, the checks and balances on the Fiscal Responsibility Act, and the implementation of the Independent Fiscal Council will eventually lead to more checks and balances for how the public money is spent, and eventually will lead to more trust into the public institutions and the government. So we hope that these efforts, these hard-won gains, will not be rolled back once the IMF program ends, and we hope this to continue beyond the program.
Elections has always been our biggest bane in terms of the economic stabilization, some will say. But as we also, and so what will be the relationship between the IMF and Ghana when we exit the program? I mean, what would the country rep be doing when we are not under an extended credit facility with the International Monetary Fund? Help us say, what will be the relationship like with the International Monetary Fund when we exit the program?
We will continue to be partners, and the fund has among its roles to surveillance is one of the key aspects. Monitoring the economic developments, the reforms that will be implemented after the program ends, and we stay ready to also assist the government with technical assistance and other issues that may arise. Thank you for your time.
Dr. Hidrinata, I really appreciate your time. And I'll be coming back again after this program ends and see what happens. This has been PM Express, engaging the country representative of the International Monetary Fund, Dr. Hidrinata, on the Ghana's program with the International Monetary Fund, the reserves, the reforms, the reserves, and also ensuring that indeed the economy can stand strong post-completion of this extended credit facility program. My name is George Afe. This has been PM Express Business Edition. Have a great day and Happy New Year to all our viewers out there.